Hey everyone, it's Julie here with TipRanks, and today we're taking a look at a few stocks with recent buy ratings from one of the most accurate analysts on Wall Street. So let's get into it. All right, guys, welcome back. Thank you all so much for being here. Today, we're taking a look at 3 strong buy stocks that have picked up a buy rating within the last few weeks from one of the most accurate Wall Street analysts. So today, we're going to take a look at these companies, what it is that they do, what this top analyst has to say, and plus how the rest of Wall Street weighs in. We came across these companies today over on the Top Experts page. This, of course, is where you'll find a complete listing of Wall Street analyst rankings. But instead of looking at their position here on the list, I wanted to sort by success rate. And at the top here with the highest success rate, we have Matthew Akers from Wells Fargo. He is a 5-star analyst currently ranked number 72 out of over 9,000 Wall Street analysts, and over the past year has an 87% success rate. And I know you might be thinking, Julie, if he has the highest success rate, why isn't he ranked number 1? But that's because there's a few factors that go into that star ranking. Not only do we look at the analyst's success rate as well as the average return, but we also consider the statistical significance. So the more recommendations an expert makes, the more statistically significant their performance results. And Matthew is ranked in the top 100 of Wall Street, so very much considered a top analyst. Just before we get into his recent buy ratings, this is a reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's get right into these top rated stocks. First on the list today, we're taking a look at OSI Systems. They trade under the ticker OSIS, currently priced at $146 per share. In the past year, they've climbed over 29%, and in the last 3 months are up about 7%. OSI Systems is a vertically integrated designer and manufacturer of specialized electronic systems and components. Those are used for critical applications in homeland security, healthcare, defense, and aerospace. They have 3 operating divisions with their security division, healthcare, and optoelectronics and manufacturing division. They market security and inspection systems such as airport security X-ray machines and metal detectors, medical monitoring and anesthesia systems, and optoelectronic devices. They shared their 4th quarter earnings report back on August 22nd, and not only did they come out with a beat and raise, they also had record quarterly and full year revenue. Q4 earnings per share came in at $2.84, beating expectations by 5 cents per share, while revenue of $481 million grew nearly 17% year over year, beating estimates by over $13 million. The company saw record fiscal year revenues of $1.54 billion, which grew 20%. Management said that with a backlog near all-time highs and visibility into a robust pipeline of opportunities, we believe we're well positioned for a strong fiscal 2025. Our top analyst from Wells Fargo just initiated coverage on the stock last week with a buy, noting that the company holds a unique position in a growing market where competitors have lost focus, with multiple ways for margins to move higher. They say that their security segment, which represents 80% of profits, has gained shares in recent years, and they expect this to continue as peers focus on other areas. They see a structural growth story in security equipment. OSI does just have 4 current analyst ratings, but it comes in as a unanimous strong buy. And the average price target comes in at $175, implying an upside potential of 20% from current prices. Looking at those ratings down below, we can see on the high end we have 180 here from B. Riley for an upside of 23%, and our low end is from Wells Fargo at 170, but still with an upside of over 16%. Just yesterday, an analyst at Oppenheimer bumped up the price target by $15. Second on our list today is Howmet Aerospace. Trading under the ticker HWM, they're currently priced just shy of $100 per share, having seen some massive growth this past year, gaining 118% and climbing over 26% in the last 3 months. They manufacture advanced engineered solutions for the defense, transportation, and aerospace sectors. They focus on jet engine components, aerospace fastening systems, and airframe structural components. They help make quieter, more fuel-efficient engines for airplanes and gas turbines, while their market-leading aluminum wheels help trucks save fuel and reduce maintenance while rolling in style, and their customers' products stay connected and secure with their high-tech fastening systems. They shared a solid earnings report for their 2nd quarter back on July 30th. Not only did the company have an earnings and revenue beat, they also increased their future guidance, bumped up their dividend by 60%, and added another $2 billion to their share buyback program. Q2 earnings per share came in at 67 cents, beating estimates by 7 cents per share, while they came out with record quarterly revenue up 14% year over year, coming in at $1.88 billion. This was driven by their commercial aerospace, which was up 27%. Our top analyst from Wells Fargo did increase their price target following this report, along with several others. Wells Fargo analyst Matthew said that they continue to see runway for further beats and raises for Howmet, with guidance still assuming a conservative 737 rate and share repurchases accelerating. Also bumping up their price target was an analyst from BTIG. They said that material suppliers continue to be the best source of growth through the commercial aerospace recovery, and while OEM woes persist, spares volumes remain robust. The stock has attracted 17 current analyst ratings, coming in as a strong buy with 15 buys and just 2 holds. The average price target comes in at $104, and with the stock seeing so much growth recently, that just implies an upside potential of over 4%. But when we look at those ratings down below, we can see some of the more recent ratings being on the higher end. On the low end, we do have a buy rating from back before that earnings report that has a downside of 15%. On the high end, we have a couple at $115, implying an upside potential of over 15%. If you've made it all the way to our third video today, then this is a reminder to make sure you hit that thumbs up button. Third on our list, we're taking a look at GE Aerospace. They trade under the ticker GE, currently priced just shy of $189 per share, having climbed 116% in the past year, and in the last 3 months gaining almost 18%. This is one we have touched on before, I believe most recently near the end of June. GE Aerospace was a result of General Electric's restructuring, and the company is a leader in the aerospace industry. They spun off as a standalone company from GE back in April of 2024. They provide jet and turboprop engines, integrated systems, and services for commercial, military, business, and general aviation aircraft. Their different business sectors include engine manufacturing, fleet services, and customer support. They shared their latest quarterly report back on July 23rd. While they did see some solid growth, they had mixed results with an earnings beat but a slight miss on revenue. Their Q2 earnings per share came in at $1.20, beating expectations by 21 cents per share. On the revenue side of things, it did grow 4% year over year to $8.2 billion, but fell about $350 million short. The company did see their total orders increase 18% to $11.2 billion, and they said they had a strong quarter marked by double-digit increases across orders, operating profit, and free cash flow. And given their performance and momentum, they raised their full-year profit and free cash flow guidance. Our top analyst, Matthew, did reiterate a buy rating earlier this month, but just a few days ago, we also had an analyst from Deutsche Bank raise their price target. They increased their Q3 earnings per share estimate up to $1.20, citing higher CES margins and lower corporate costs, and seeing their CES services revenue and margins benefiting from a wide-body mix, greater shop visit work scope, spare part sales, and price. GE Aerospace has 12 current analyst ratings, and once again, we have another unanimous strong buy. The average price target comes in at $197, implying an upside potential of about 4.4%, and we have a pretty close group of price targets here. On the low end, we do have a couple buy ratings that have been surpassed, all with downsides of 4.9%, while our high-end price target is $215 from UBS for an upside potential of over 13%. So that is a quick look at 3 stocks, all with recent buy ratings from one of Wall Street's most accurate analysts. Let me know your thoughts on these 3 companies and whether they were on your radar or not. I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you always do your own research and due diligence. Thank you guys so much for watching. Have a wonderful day, and I'll see you back here next time.